Most business owners are out here working nonstop, landing projects, selling services, but somehow still wondering where's the money. Not because they're doing it wrong, but because no one has ever taught us how to actually run a business that builds freedom. In this video, I'm breaking down 5 pillars to financial freedom in your business. These are the moves that separate the ones who stay stuck from the ones who build something real, something that actually funds their life instead of draining it. I'm Zoe, a CFO advisor and CPA. My team manages millions in annual revenue for our clients, and I help founders master their cash flow and expense management without losing their minds or their margins. If you're ready to run your business like an owner and not just like a hustler, this one's for you. So let's get into it. All right, today we're talking about the 5 pillars of financial freedom. And it's really from the perspective of your business. I can almost guarantee that if you build your business on these 5 pillars, you will be well on your way to financial freedom. All right. So what's pillar number one? Pillar number one is what we call money flows. This is this is basically saying that your job is to direct the money flow. Did you know that it's all about the money flow, not just what is stagnant in your bank account? Right? The money flow is all about cash that comes in your business and the money that goes out of your business. The more you control, the more that you direct, the more likely you are to hit that financial freedom number. All right, so there's 2 elements, 2 ways that I believe that you can control the money flow, and it's is by these 2 ways. It's one by control and one by growth. Understanding those 2 elements. Now, what do I mean by that control? I know I said it was redundant, but what I mean by control is really understanding your capacity. Understanding your capacity as it stands today and understanding your capacity as it will be tomorrow. When you have a right perspective on those 2 things, then you have a right perception of where you are and how to actually get to where you're going and what you actually can do or the speed at which you can get to where you're going. Because if you start doing the things that you think you will be able to do tomorrow, today, you're going to be misaligned, out of season, and perhaps running on E or running too quickly, and you won't get the result that you're looking for. So understanding your capacity is, where am I at today? How much can I do? What is available to me now? Though I know in the future, that's where I want to be. That's what's going to be available. So based off of where I am today, what is the next step that I can take? And then that brings us actually to the second component of mastering the money flow. And this is about investing intentionally. Is called growth, but the idea is investing intentionally. Now that you understand your capacity, now your focus, your priority is now investing intentionally with the intention of growing up. How many of you know that it's possible to not only grow up but also to grow down? There are people who invest into their businesses or invest into themselves, and their growth is going in the wrong direction. So it's very important that you get this part right. It's not about just doing everything, it's about doing the right things. It's not about investing in things that will just keep you busy. It's about investing in things that will make progress. Right? A lot of folks try to grow way too fast and they actually don't have the control. They don't understand their capacity. And others try to control everything without really understanding what is the right thing that's going to actually trigger the growth. And so your financial freedom in this pillar is going to come from balancing both of these elements, so that you can actually master the money flow. Pillar number 2 is mastering the way that you think. The way that you think about money is how your relationship will be about money. You know, it's funny because we actually don't realize how much of our financial freedom is going to be dictated based off of the things that we think. How much our business success will be based off of the things that we think, right? Did you know that the way that you buy affects the way that you sell and affects the way that you manage your business? What do I mean by that? If you buy with the first priority of your purchase being the cost or being what you are losing, it very well may bleed into how you actually sell or position yourself in the marketplace and what you consider, and how valuable you consider what you're actually doing, right? If you're a cheap buyer, you likely are going to be very quick to discount what you offer, very quick to customize, and capitulate. You will subvert to whatever the people are requesting, and that's not always a bad thing. But when you come into a room, you already are negotiating against yourself simply because you have that mindset of cost. You probably think that the thing that you are offering in service is more taking away from the client, taking away from your people, rather than adding to your people. And that's a direct result of a cost first mentality, right? And it's not saying don't think about the cost. It's about the order of the priority when you buy. Buying affects how you sell, how you even position your business. But what if you flip it on its head and now your mentality is like, all right, I'm going to buy with value first. Value first. The first thing I'm thinking about is, does this thing that I'm buying, does it actually solve the problem that I'm facing? Does it create transformation for me? Does it make my life easier? Does it actually get me to where I'm trying to go, what I'm trying to do? So taking that value first mindset and now pivoting over to how you sell and how you position yourself in the marketplace. Now, when you think about your offer to your people, you understand it's actually adding to them. It's not subtracting. In fact, it's going to solve their problems, take them to where they're going, take them further than they've ever been. You have the results to back it up, and you know you can transform their situation. So the second priority is the cost. The first is actually the value given. The way you talk, the way you present, the way you even give your offer completely changes simply because your mindset around money has shifted. You're no longer cost conscious first, you're value conscious first. All right, cool. Let's go to that third pillar. This pillar I really love because I'm a CFO and this part is super powerful. This pillar is all about, pillar 3 is all about budgeting and forecasting. Now, budgeting, when we first hear that, that's a not a buzzword, is actually a curse word in many of our circles, because we see budgets so much as guardrails. We see budgets as restrictive. We see budgets, when we hear budget, we hear, oh man, we can't do anything. Oh man, a department is going to get cut. Oh man, it's just a restrictive. Budget is a restrictive word. But I want to change your mind about what budget actually is, because if you understand what the goal of the budget, you'll be quick to embrace it. A budget actually is a guardrail, but it's not like you see. It's not just restricting you. It's a guardrail that actually protects you. It protects your profit that you so desperately actually want. That's why you're actually working. You're working in your business to generate a profit. Well, at least I hope you are. Some of us aren't, but maybe most of us are. But your budget protects your profit. It's literally like the lanes on a track. Have you ever ran track? I ran track. Actually, when I ran D1 track and field in college, I ran in high school too, but that's beside the point. What I'm saying is that in my experience, there are lanes on the track for a purpose. Not to say it's literally not to say that it's to restrict you, it's to direct you. It's to say, hey, if you keep on this path, you will make it whatever distance, 400 meters. I'm thinking of 400 in my head, 400 meters from start to finish directionally. Like, you will go in the right direction. And it actually guarantees your profits, because if you were to step outside of those lanes and those guardrails, you know what happens when you do that? There's risk. You actually get disqualified from the whole race because you're not even going in the right direction. So budgets help your business run in this lane and get to the finish line, have a pathway to the finish line. That's what a budget is. It is helping you. It's guardrails. Now, thinking about budgeting is only the guardrails, only the pathway to the finish line. You know what's cool when you add budgets and forecasting? Forecasting is literally, it's the vision for the plan. It's not just the vision, it's your race plan. So we're back to this track analogy. So forecasting is actually like your race plan. So it tells you, are you speeding? How should you speed up? What you're going to do on the first half of the race? What are you going to do on the second half of the race? It actually allows you. It's for imagery's sake. It's as if you're lifting your head and looking forward. That's what forecasting is. You look up, you lift your head and you look forward, and now you can actually see where you're going. You can actually avoid the rocks in the road, the dips, the turns in the track, so that you can curve around those turns very expertly. You actually, it allows you to not step over the budget. It sees where the other runners are running. It sees how much race you have left, how close you are to the end of the year. It's literally you looking up and being able to see ahead and develop your racing plan. But it's for your business. Imagine if you can look up in your business and see 6 months ahead. Not just 6 months, but 6 months of a clear path that if you follow your budget and you're looking straight ahead, you actually get to the finish line, which is securing your profit. That's so powerful. So this pillar, budgeting plus forecasting, man, if you get this part right, if you get this part right, there's nothing that really can stop you. You are going to be the type of person, the type of business owner that can set a plan and actually follow through with it, and be the type of person that actually reaps the rewards, gets the results. If you lock in on these two elements, you're going to be not guessing about where you're going, but you're going to be leading and actually accomplishing, actually driving where the business is going. All right, let's go to the fourth pillar. So this fourth pillar, I love it. And it's actually the thing that it builds on top of the budget and forecast. What is this? This is called your cash flow. Cash flow is the fourth pillar. And what it does, it really, and we're still sticking on this racing analogy, cash flow allows you to set the pace of your business. It paces your business, helps you know the speed that you can take action, that the speed at which you can execute a strategy, the speed in which it tells you when you should slow down and when you should speed up. In business, it really helps you to stay the course, because have you ever seen in a track race where someone is starting the race, right? It's 8 people, the gun goes off, they're running, everyone gets out hard, right? But then there's lane 4 breaks away from the crowd. This is a 400-meter race. Lane 4 breaks away, and they're like so far ahead. It's like they've left 60, 70 meters on everyone else. The crowd is watching in anticipation, and they're like, "Whoa, is that the second coming of Usain Bolt or of Magic Johnson or Michael Johnson?" And then lo and behold, by the second half of that race, what happens? That person's so far out ahead, but for some reason, they start coming right back. They start slowing down dramatically. Not even a gradual slowdown, but the slowing down is so dramatic that it's as if they're running backwards. And the rest of the pack, or the runners that they left, they just overtake them so quickly. By the time the race is actually over and everyone has crossed the finish line, that person, lane number 4, who was so out ahead, is actually 50 meters in the back in last place. I've seen it so many times. That's the same way in your business, cash flow, because that guy, that person, that girl, lane 4, didn't pace themselves. In fact, they sprinted out, used up all of their capacity in the first half of the year, and they didn't have enough strength to actually hold their pace, and they ended up being dead last crossing the finish line. It's the same way in our businesses, but we're talking about cash flow. Cash flow is how you actually pace yourself. For all of our seasonal businesses, you might have all of the cash come up front in one quarter, and Q4 might be your amazing year because that's the holiday season, right? For many of us. And then by the time Q1 is over, you've spent all of your dollars in Q1 that you got from Q4, with nothing really to sustain your business in Q2, 3, Q1, Q2 and 3. And so now your business is even more seasonal than it actually has to be, simply because you didn't pace your activity. Cash flow allows you to see what you can do and when you should do it if you forecast it. When you forecast your cash flow, what you want to pay attention to is what I call the peaks and the valleys. This is really going to tell you when you can actually take action. The peaks say that's influx of cash. That's saying, all right, we got a lot of cash. Peaks is actually the height of our cash balance. The valleys are the direct opposite. That means when your business is running on E, you have low cash. And so what you want to do when you plot that out and forecast, you can directly see, all right, maybe in month number 3, in quarter number 4, that's when we should hire that next person, that next team member. All right. What about in month number 6? Maybe it's 4 months later or whatever it is, right? And you see a peak. Oh man, that's when we should be quite conservative in our spending. Maybe we can cut back on some of those extra spending areas that are more, wants than needs, right? Maybe it's that maybe you see a long-term cash crunch that's happening valley, and you're like, okay, we're going to start having to downsize in this time, and maybe we shouldn't downsize. Maybe we should actually go out and get additional funding ahead of time before we actually need it. Have you ever heard when someone says, don't get funding when you need it, get it when you don't need it? The way you actually can do that is by be able to predict when you actually will need it and responding today. So it's not necessarily like, oh, arbitrarily, oh, let me just go make it a practice to always get funding, which is great. But it can be strategic. Like, all right, next year we have a project coming up. We've already plotted what the cost is going to take to get it off the ground, what the deposits we're going to collect, and how we're going to start it. And you've plotted that a year in advance. You might say, all right, our normal operations are not going to give us enough cash to be able to start that project. So we need to go out a year in advance talking to our bankers, building those relationships and securing funding before the project actually even starts. That's the power of cash flow. All right, let's go to our final pillar. This pillar, honestly, it's the game changer. It's the hack. It's the thing that if you get right, you will always put yourself in position to be able to take the next step, to be able to run faster, run further with less energy. And that fifth pillar is don't run alone. It's all about your community and your support. Who is around you? Do you have like-minded business owners? Do you consult with consultants? Do you have advisors in your firm? Do you talk with a CFO to help you along with these things? Right? Do you have a coach? Who are you talking to? Who is your community? Who is helping you? This one is so important to me, and we're gonna stick on this runner analogy because it is so accurate. So when I was in college, I told you I was a runner, right? I ran long distance or medium distance. I did cross country, 800 meters, and so I was a runner. In college, we would wake up 6 a.m. and go on these long runs that our coach would have us do, and it would be we called it tempo runs, and we might go for 6, 7, 8, maybe sometimes 10 miles, 5 miles one direction, 5 miles back. There were some mornings when it was literally just one or two people who were awake because college students 6 a.m. sometimes the night before was a little hard. So anyways, there was times I remember I would be going on these runs by myself. Man, when I say the time actually slowed down for me. Time slowed down. The distance I was running felt like everywhere I was going, I would never get there. It was so difficult to do by myself. I completed it. Sometimes I actually didn't. Sometimes the allure to quit, the temptation to just stop, slow down, or not keep focus was always there. It was heavy. But on the occasions in the morning at 6 a.m. when the team was up 5:45 refreshed and it was like 10 of us, man, when 10 people come to a 6 a.m. session, there's a different type of energy, right? When they come and they're all focused on what they're trying to accomplish, there's a different type of energy. That same 10 miles, 5 miles there, 5 miles back, completely went much faster. We ran faster and it was so easy. It was way easier. When you have 10 people running, it's like a momentum. All of us are just moving as a pack. In fact, when we're running by bystanders and people who are watching, we feel cool because we're all together. We're all together, right? And we start running faster. It's sometimes when you're running together, you're running so fast that you're like, wait, are we racing right now? Or are we supposed to be just, setting our pace? So when the momentum of others come together, you might be running to the point where you feel like you're even racing. And that's good because it pushes everyone, it helps everyone to test their potential. And the entire race, when you come back, you're actually joyous. You're like, wow, we just did that all together. And it's the same way in your business. When you're running with people who have the mind to get up at that 6 a.m. and like, let's do this thing together, everyone is of the same mind. You have an inertia, a momentum that just pushes you closer and closer to your goals. So, pillar number 5, don't run alone. You can go wherever you want to go it's like by yourself, but if you want to go far and even faster, go together. So, if you're serious about building your business, a business that actually funds your life and not just your lifestyle, then these pillars are not optional, right? They're essential. Your mindset, that's the foundation. Your budgeting and forecast, I said that's a superpower. That's your GPS. And your cash flow, that's your fuel gauge. And your community, that's your pit crew. Those are the people who are going to help you get up and build that momentum, right? If you build your business on these the right way, your business will stop feeling like a treadmill and more like a machine that you're actually driving. So if that's what you're building towards, then I want you to like this video, hit that subscribe button, and stick around because we're not just talking about numbers, we're building businesses that actually pay us back. I'll catch you on the next episode.